Hello again everyone, I hope you're having a great weekend. So for this video, I'm going to be having a look at Home Depot and their upcoming earnings release, which is due before market on Tuesday, making Monday the last trading session before this information comes out. To do this, I want to undertake a bit of a technical analysis of the stock's recent trading history and look at some earnings estimates, general investor sentiment, as well as looking at some recent headlines about the company. In the end, giving my thoughts about the stock and the company for the long term. But before I do that, I want to quickly remind new viewers here that I am planning on setting up my channel as a social enterprise going forward, meaning that I want to use the money raised from YouTube advertising to support a range of good causes that I feel passionate about. I think it's a unique way to make a difference. Rather than people donating money, people are supporting the causes simply by watching videos like this one. So I want to encourage people to sign up to the channel and support this unique initiative. We're getting close to the 1,000 sub mark now, so thank you for everyone who has joined up so far. With that out of the way, let's get into the video. So the inspiration behind looking into this stock is that I read an article in Forbes yesterday that identified Home Depot as being the most trusted brand in America, along with similar bricks and mortar brands, Ace Hardware and Lowe's also featuring in the top 5. Now, I'm not personally invested in any of these three companies, however they are all businesses that are reminiscent of the first stock I ever bought, a company called Wesfarmers, whom I used to work for back in my university days, who own Australia's biggest home and hardware chain, Bunnings Warehouse.
Lowest prices are just the beginning, that's our policy.
Reading the article was quite refreshing and gave me an opportunity to inflect on picking good businesses to invest in for the long term. When reading and looking at what is going on in the investing world these days, it can be very easy to get carried away on looking out for the next big growth company that will hopefully 10x your investment. But I think there is a case for businesses such as Home Depot to have a part in a long-term portfolio. One of the key takeaways from the article regarding Home Depot, which I will link in the description, for me was that stores like theirs that have successfully built a strong online presence while continuing to have healthy patronage in their traditional bricks and mortar stores have built a greater sense of trust and loyalty among shoppers. These types of businesses are able to develop stronger connections with their customers, something that pure play online retailers struggle to do. And given the nature of their business offerings, this connection through things such as in-store advice and tips will help them continue to thrive into the future. The article does discuss the fact that the stay-at-home pandemic boom Home Depot saw will likely slow a little into the second half of this year. However, given the high percentage of millennials who have indicated that they will be looking to buy a first home in the next 2 years, it's likely that companies like Home Depot will see consistently strong performances going forward. The sense of stability and consistency for Home Depot can be seen through their trading history. The stock recovered quite quickly from the market plunge that occurred due to the onset of the COVID pandemic and has grown by almost 50% on what the stock was valued pre-pandemic. Considering this was a period where the tech giants were the main feature of momentum in the market, it would seem that this surprising stock growth may have fallen under the radar for many. And now that bricks and mortar stores are operating at more normal levels, for Home Depot, returning to a state of business as usual shows that this is a company that is resilient and can continue to deliver stock growth in the various market extremes we have seen over the past 18 months and may well continue to see in the coming months and years. It is worth noting that currently the stock price is sitting below its peak price point, which was achieved around the time the company's May quarter earnings were released. To me, this could be an indication that traders are expecting a slowdown in earnings growth on the horizon. I think this thesis of slower earnings is further reflected in recent trade as the stock has seen a bit of downward momentum leading into the weekend. The fact the stock's price has fallen below all three of the moving averages, has been riding the bottom of the Bollinger Band range and is towards the lower bound of the RSI, suggests a bounce back in price may occur when trade resumes on Monday. It will be interesting to see if this title of being the most trusted brand in America does anything to help push the stock price back up. In terms of what is expected for the stock from analysts, overwhelmingly, there is a buy rating based on 36 brokers. Interestingly, however, currently the consensus 12-month price target is only $332.52, which is only a mere 0.36% up on the current stock values. However, some of the analysts covering the stock have more optimistic price targets, with the highest being $386 per stock, which is about 17% above the current price level. So if you are optimistic on the stock, that would be a nice bit of upside, while keeping in mind that you will also be receiving a nice 2% dividend yield paid out quarterly. Now, when it comes to Tuesday's earnings, analysts are expecting Home Depot to post $4.43 in earnings per share for their August quarter. This is a figure that will be of extra interest for the stock because there is a discussion around whether Home Depot's COVID business boom has already begun to fizzle out or not. So looking at Home Depot's interim income statements, that $4.43 per share earnings forecast is a strong improvement on the May quarter result and almost 2% up on the same quarter last year. It is worth pointing out that August and November quarters tend to be stronger trading periods for companies like Home Depot, as most people prefer to do renovations when the weather is a bit fairer. For the same reason, Bunnings in Australia does better trade in their December and March quarters, but I digress. Given that the way markets theoretically price stocks is based on future earnings, the forward-looking statements will be interesting to see. I would not be too worried if they are predicting a price drop-off from the August quarter that they're about to post. I will be more focused on seeing how much they can improve earnings compared to the 2020 November earnings. Anyway, like I said, I'm not invested in Home Depot, but I do think there is a compelling case for holding the stock longer term in your portfolio. It is a business that has built up a good offering both online and through its bricks and mortar business. Customers have great trust in the brand, and barring some huge corporate disaster, this is likely to remain the case for some time to come. Add to that, Home Depot has a fairly stable dividend payment and historically has demonstrated fairly consistent growth as a business. However, on the other hand, given the recent boom the company has experienced, it would not be too surprising to see a slowdown in the short term being predicted on Tuesday, which could be a flag to maybe put off adding this to your portfolio. That's a decision that you'll need to make though. All in all, Home Depot has proven to be a company that can survive and even thrive in a locked down economy, and has an offering that will continue to be in demand going forward. Anyway, what do you guys think? Are you long on Home Depot? Do you think the forward-looking statements are going to show the continued optimism for the company? Let me know in the comments below. If you would like to see more stock-related updates, I encourage you to subscribe to the channel. By doing so, you are helping to support the social enterprise initiative I'm hoping to turn the channel into in the near future, where just by watching videos, people are helping to support good causes at no financial cost to themselves. So I encourage you to sign up and be a part of all that. It's a good opportunity to use the power of YouTube for a social good. Anyway guys, until next time, may the markets trade in your favor. Cheers.